how does all those people losing that money impact your sales?
Well, we haven't seen it yet, Alex. I would tell you where we are today and what we've been navigating since this all began back in January, February in Asia is just paying very close attention to our consumer. We've changed our approach. We've become much more empathetic and engaged in how we speak to and invite our consumers to be part of our brand's stories. Trying to bring more creative, fun environments for people to participate in as we all live, work, and operate in a very different environment. So I think where we find ourselves is very well positioned to engage consumers with where they are, which is really on the digital platforms that we offer, and inviting them to be part of our community. And when they want to transact, being there ready for them, but not making that the primary point of what we're trying to do with them.
What's happening in bricks and mortar, Steve?
Well, bricks and mortars certainly has been the issue from the beginning. We went into full lockdown back in middle to end of March. But as stores started to come back online in May, both our own as well as our key wholesale partners, we saw consumers, absolutely willing to come to our stores, engage with our employees, engage with our partners' employees. I think the most important part is those consumers that are coming to brick and mortar are coming highly motivated and prepared to transact. Traffic is not at the levels that we would historically expect, but conversion is much higher. So consumers are highly motivated and engaged. And I think what's fortunate for us is the consumer trends that we see. Is a high level of interest in the outdoors and exploring outside. Casualization is a norm now, and our portfolio is very well suited to serve consumers in that need.
Casualization. I don't know if I've ever heard that word before. Steve, just for the day-to-day operations, you were paying retail associates in the U.S., Canada, and Mexico full salary and benefits through May 30th, and I'm interested as to where that stands now.
Yes, so from the very beginning, as I said, as this started for us in Asia back in January, February, we took a people-first approach to how we wanted to engage with our employees across the globe. And as the virus began to spread across Europe and into the United States, we kept that commitment. And we have not furloughed any of our people. And we continue to have our people on our payrolls, because in the end, be it our teams in retail, our teams within our supply chain or distribution center, they're critical to how we serve our consumers. And we need them to be with us over the long term. So that decision is still in place, and one that we're very proud of and getting a lot of credit for from our employees.
Steve, you talk about Asia and you talk about the fact that that's where it started. What is the picture, US versus international right now? What are you seeing in Asia? What are you seeing in Europe?
Right. So we just reported earnings today, and our results were slightly better than we expected, and that in large part was due to our international and digital businesses. Our digital was up 81%. But what's exciting and what's really satisfying for us is our China business has returned to growth, and in fact, it's returned to growth about a 1 month before we expected it to be true. So we do see the Chinese consumer and the Asia consumer more apt to engage. The pandemic is further down, the path, and we're well positioned to be there, be with our consumers, and offer them the experiences as well as the products that they're looking for.
So that's interesting, because I wonder, how are you seeing consumer preferences across categories, channels, loyalty? Are they changing after reopening?
No, the trends I mentioned earlier are really important for us as business leaders to pay attention to. This notion of greater interest in the outdoors and being outside, more interest around health and well-being and what that might mean to your activities. This notion of being more casual in how we dress. Clearly, we're all working from home, and we don't need to wear our suit and tie like maybe we have in the past. But there's also a deeper, understanding and interest in sustainability, and that positions us well in our quest to combat climate change as a collective portfolio of brands. So those consumer trends really align with our portfolio and the products that we offer, but more importantly, the experiences that we offer, because it is not just about trying to convert a consumer to a sale, but it's about trying to take you from that awareness and consideration to the other side of the equation of loyalty and advocacy, and building a strong community of consumers that, as we emerge the other side, will be in a much stronger position, to engage and transact.
Steve, I've still got my tie on. I'm feeling slightly overdressed, but
Do you have shorts
maybe
on,
I'll have to go for,
Do you have
for the
shorts on?
greater casualization. No, I don't.
You do. Don't lie. It's hot
Let's
there.
talk a little bit about. Let's talk a little bit about what is happening in terms of inventory management, Steve. I'm fascinated by this. Some companies are really executing very strongly. They're using RFID and all kinds of technologies to track exactly where their stuff is, and how they manage it more effectively is really showing up in their numbers. What are you doing to improve inventory management? Kind of what does inventory look like right now?
Right. So the short term, near term, we spoke today on our earnings call that our inventories for the quarter were up 2%. And one of the things that we went quickly to do when the pandemic became, very clear with its impact, was to move to really evaluate, forward inventory needs, order book needs, working with our suppliers, working with our retail partners, and right-sizing our inventory and adjusting that flow over a period of time, and really doing that to put ourselves in a stronger cash position. As you think future and where you're going around using technology to understand our inventory, that's a serious component of our transformation agenda, and how we think about bringing digital capability across the entire value chain, from how we create products to how we manufacture products, how we manage them through our distribution centers and into our own and partner wholesale stores. So RFID is a thing of the future. We have a number of pilots underway to understand how we would use that to better, manage flow and never out type mentality, for our retail stores. So the digitization of our value chain is a critical part of our long-term transformation.
Can you just, as we round out here, I'm curious, as you sort of put more money into that, you're still backing up all your workers and you still have to sell a product. What do your margins look like? How much visibility, really, do you have into your margin story in the next 6 months?
Well, we came out today and talked about our gross margins. We've seen a mixed benefit from our shift to more digital. So there's a positive element, but we've also seen some takes from how the inventory is moved in more of a sale mode to quickly right size. So where we see inventories and the impact on gross margins in the future is as we get through the level setting of our inventories and we shift to a more direct digital business platform, margins improving over time, and we've committed in our long-term journey to get to the mid to high teen, operating margins, and over time, that algorithm is still possible, but really managing the near term as we look at this mix shift into a more direct will be positive, for our gross margins.